All right, everyone. Well, Sunday morning here, and I'm going to go over the game plan for the week ahead. Hope you guys are having a great weekend and enjoying a couple days to relax a little bit. So, last week was a short week, and usually when I go over the game plan, I take a look at the previous week and kind of set the context a little bit before we look forward. So, last week was a short week with Memorial Day on Monday. Ended up finishing the month of May on a high note. Account right now is at all-time highs, which is great. Not currently in a drawdown. I did have a little bit of a rough month in some ways. Let's see. Let's go and get this just for the month of May. So the last 30 days or whatever started the month with a couple of nice green days and then went into the red on the month. So this was on May 5th. I lost $9,500, and on the next day I lost another $1,800. So I went down $10,000 in these 2 days here, which was definitely a drag. And that hurt my total performance for the month of May because, it's a $10,000 red day, a $9,000 red day. And then I had another 2 red days here in the middle of the month, 3,100, and then this one here at 6,600. So, I ended up having a couple more red days that were a little bigger for the month of May. April was better in that regard, but I ended up finishing May just about $40,000 in profit, net profit after fees and commissions, even in spite of these, red days. So if I hadn't had those red days, I would have been up 60,000. Now, it's not really realistic to expect a month with 0 red days. But these 2 red days got a little too big, and that's, $15,000 between the two of them. So maybe I could have been closer to 50 grand on the month if I had capped these red days at like minus, 5,000, which is my max loss. And this is on me. I should have done better. So ended up finishing the month last week of the month. No trades on Tuesday. I just didn't see anything I liked. And then small green on Thursday, Wednesday, Thursday, and Friday. So sort of a small week to finish the month. One of the challenges for me, certainly in the month of May, was that a lot of the stocks that were in play were cheaper, and I don't really have a good edge there because of fees and commissions. So definitely something for me to consider if those lower price stocks continue to be in focus, because I might have to consider using a different broker because my broker with the fees and commissions just makes those very hard to trade. So for the most part, I didn't trade those cheap stocks, as you can see here, but I probably missed out on some opportunity that I could have had otherwise. So performance by price, I think it's just sort of an anomaly this month that I had some losses between 5 and 10. That's not common. So it's probably just that I had the couple of bigger losses just happened to be in that price range, which was they were bigger because I was being stubborn. If we look at the, instrument, we can get a little more detail about the type of stocks I was trading. You'll see that I didn't do as well on lighter volume stocks. I did better on stocks that had higher volume. So, that's something to note. This is measured by the volume at the end of the day. So that's a little tricky if I trade it really early. But if I trade it early and it still at the end of the day has light volume, then obviously volume didn't come into it. This would be a little bit more helpful if it told us the volume at the time that I took the trade, but anyways, that's not what it shows. So still trading the most obvious stocks, which are going to be the ones that have high volume by the end of the day, it makes sense. Performance by instrument relative volume, again, just standard. That's where I made the most money. And some of these losses, which, add up, were on stocks that were under 5 times relative volume. Now, you might wonder, given that I know I do better with 5 times higher volume than average, why would I even bother trading anything below that? And similar with volume. And the reason is because when something first pops up on the scan, it might have 500,000 shares of volume or 250, whatever, and only have 2 times relative volume. We're down here, but it has a breaking news catalyst. And if I'm in early, then it'll become one of these stocks by the end of the day. So again, at the moment that I trade it, and I'm actually not 100% sure if this is calculating based on the moment I take the trade or by the end of the day. In any case, a little bit of a challenge there with the metrics because not totally sure how they calculate. But I'll tell you the reason that I'll sometimes trade something that has lower relative volume is because I think that I'm seeing it sort of at the beginning of the move. And so for that reason, I'm like, oh, this thing is moving. So like, let's see this one, for instance, CNDT, relative volume began at 2.3, but as the price moves from, oh, well, this is a different stock. But in any case, let's just pretend it's the same stock. So it's 2.34, and then next thing you know, it's at 4.5. It's moving higher. But that's typical as stocks are moving up the scanner. So this one, ELWS, here is at 7.36 relative volume on the daily. But we go back here at the beginning, and it was only 1.38. So if you had jumped in this one at $2.73 at that time, you were getting in something that was both light on relative volume and light on total volume. And I don't know if it had a catalyst. It looks like it did. So, you know, you've got news. It's moving. It's obviously up, you know, what is it? Percent, 18, 19%, but 10% in the last few minutes. So that's the challenge, because you'll see a setup like that and think, well, it's definitely moving. Is this something I should consider for a trade? It may not meet my criteria yet, but if I wait for it to be at that level, it might be way up here or higher. So those are the scenarios where I'll be more likely to jump on something early in the move, even if some of these metrics are not yet meeting my standard. It's when I think that they will meet it soon, if that makes sense. So again, so overall, these metrics do paint a picture of my month of May. Had a gap down reversal where I made some money. That's not usually common, but occasionally that'll happen on a continuation stock. So anyways, and biggest winner was on GameStop, which makes sense because that one was volatile during the month. Okay, so that's where I sit there for the month of May. $40,000 in the green. Overall, it ends up being kind of similar to other months this year. It wasn't a let's see, just do like this, and we'll just dial into 2024. So, you know, this is my year so far. January, May, and April. January, April, and May. Both basically, you know, all three kind of similar, about $30,000 to $40,000. March was a little slower because I had a couple big red days, and February was a lot higher because the market was really strong. So averaging, you know, on regular months between 30 and 40,000 is good. Having a month where I'm down here at 10,000 is definitely the result of some mistakes, and that was the case. And then having months that are above, way above, is when we've got a hot market. So, you know, my hope for the rest of the year is that I can just be at least at the minimum steady between that 30, 40,000 a month level. That has me tracking for $500,000 a year. And then a couple of months like this can push that up to $750,000, $1 million, or even higher, as I've seen in previous years. A couple of slow months, though, that's going to hurt. And this isn't just slow. This is me making actual mistakes, right? So we look at the calendar here, and you'll see, you know, the month of March, I've got a $30,000 drawdown right here, right? That was completely, you know, avoidable. So I've got to make sure I'm not making those errors, you know, and if I could do that, then I can keep myself in good shape. So these last 3 days of May, base hit, base hit, base hit. There wasn't a lot of good opportunities. I didn't hit my daily goal on these days, but you know, $4,700 is green. It's good, and I'll look to continue that focus going into June. Okay, so now let's talk about looking forward to the week ahead and the month ahead. So now we're coming into the summer. Typically, I don't really have any issues with June or July, but August, you know, ironically, August was my biggest month of the year last year. In 2023, let me just double check this, but I'm almost positive August was my best month of the year. So let's see. Yeah. No, I'm sorry. It was September. August was slow last year, but September was good. And then October was good. So, last year I didn't have any huge months like I had in February, which was, that hurt my total end of year performance. But nonetheless, September was really good. But, June, July, and then August was slower. August does tend to be a slower month. It was my best month of the year in 2022. That's right, 168,000. That was a solid year. Let's see for that August. Let's see. August, slower in 2019 for sure, but August was decent. 2018, August and September were dead slow. 2017, they were super slow. 2016, they were solid, right? Solid summer months. The summer was my best, best 3 months of the year. So it just goes to show that you try to predict and expect what it's going to be, and then, the market will surprise you. So typically October, November, December are really strong, but in 2022, that was not the case. So, I try not to base too much on what is seasonally typical because the market tends to just disregard that entirely at times. So I would say in general, my focus for the summer months is going to be more or less the same as what I've been doing. Starting each day, max share size, 5,000 shares till I'm up over $1,000. Once I'm up over $1,000, increasing share size, scaling up, leaning in, getting aggressive, making my way up towards that $4,000 or $5,000 daily goal. On days that it's hot, I'll be up $5,000 in the first couple trades, and then I'm making my way up towards 7, 8, 10,000 or higher. I think my biggest green day this year is it's only about $20,000. It's not a huge green day, so it'd be nice if we got the type of price action that could give me a $40,000 or $50,000 green day. But that'll, if the market wants to give it, I'll be happy to step up to the plate and trade that action. But so far we haven't seen that kind of those kind of opportunities for my strategy. So I think looking at some of the stocks that have been popular in the last couple weeks, we've continued to be in this theme where there's been a lot of attention on penny stocks. So I'm going to pull up my penny scanner here, penny top gainers. So NVOS, 139% on Friday. This one, although it made a bit of a move, it didn't hold up super well. Just interesting. PRTG, cheaper. FOXO. If we sort by volume, Friday was a lower volume day. The highest volume was on NVOS, and it was 300 million shares. We had several days during the week where we had nearly 1 billion shares of volume on some of these cheap stocks. So Friday was a little bit more mellow. VCNX, this is one that popped up on the scans early yesterday, but I didn't, I wasn't really sure about it. Anyways, it goes up, halts, comes back down. A little tricky. I'm hoping that we can kind of get out of the penny cycle just because it's not where my strategy really thrives. But as I said earlier, if it continues to be what's in focus, then I may consider using a different broker to try to participate in some of those trades because the commissions are just such a disadvantage that I really can't trade them the way other people are trading them. So that's a consideration. I'd probably use Thinkorswim for the penny stock broker if I was going to do that. But I'm just kind of hoping that attention shifts away. And it'll probably happen when we have a stock that's in the $3 to $5 price range that, pops up to 6 or 7, drops down, and the next thing you know, it's at $10 a share and it's grinding higher. And then it's at 12 and 15 and 18 and 20, 25, 30. One of those types of moves usually will get people sort of looking for the next $3 to $5 stock. But right now, people are looking for the next 20 to 30 cent stock that's going to go to $3, which is definitely a juicier move. So I get why people are looking for that, but we seem to have a lot of imposters, a lot of stocks that look like they might make that move, but then they really don't. So looking at the overall market, I was happy to see that the S&P 500 had a really strong close on Friday. Um, this was kind of funny. So we finished. It was not looking good when I walked away. But then at the end of the day, I looked on my phone and I saw this big, kind of inverted head and shoulders pattern, and I was like, whoa, what a reversal, what a strong finish. So down to 518 all the way up to 528. I wonder if we'll see a little pullback on Monday, but maybe a slight gap lower, and then we'll see. Maybe we move higher. I guess I could check the futures, but it doesn't really matter. The only thing that I'm really kind of commenting on is that the market is a little kind of top heavy here, just in the sense that we had this really strong rally for 6 months, a sharper pullback, kind of a move back up, but we weren't able to like really push through. If this was a 1 minute chart, I would be very cautious because I would be thinking, well, if it was really strong, we would have held, this level right here, right? The previous high. So we came up to this level, but then we were back below it. Now it battled to get back above it on Friday, and we did hold above it, close above it. So maybe that's that bullish bottoming tail. And now if we can hold above it, well, all right, start the next leg up. We'll see what happens. I guess you could draw an ascending support trend line right around there. So let's see, something like this. Sometimes, when I draw these, I try to see. So that kind of connects down there a little bit. That's pretty close. But then I saw another one there that connected. Where was it? Right there, which also seems kind of valid, right? So then you pull that one back. Do either of these touch previous? No, they're both too steep. Sometimes I'll kind of try to get one that I think is accurate over a longer period of time. Right, so tap, maybe something like that. But that's way down there at that below the 200. So, yeah, I don't know. We'll see. It doesn't seem like it really bounced off of, it's close to this level, but NVIDIA has the stock split coming up this month. So ended up rallying on earnings and then continuing for 3 more days higher. Now has had 2 days of pullback. Well, just looking at some large caps just to see sort of where we're at. Tesla, this one, this is kind of funny because it sort of juiced the returns of the S&P 500 with the inclusion, but now it's down substantially since that time. So it's actually pulled the S&P return down a bit. Meta, really kind of wild. I mean, think about this from a volatility perspective. It was down here at $75 a share. Now it's all the way back up to 466. Like, I mean, this was some serious volatility from 400 down to 475, and then all of a sudden back up to here. That's pretty wild. Well, sometimes I like to just take a look at some of the large caps just to see what they're doing. IWM is the small cap index. This is above the 200. It's not back at its all-time highs. Small caps usually take a little bit longer to rally up, lagging behind the overall market. And the higher interest rate environment is not helpful for these companies that need to borrow money. And they're not going to be selling, bonds the way Apple and some of these, I don't know, other big companies might. So they're going to have to borrow more at standard rates, which is going to be more expensive, or borrow by offering private placement deals at a discount to current price, which we definitely have seen a fair bit of. So, when I'm trading each day, I don't check all the stocks I'm trading to see whether or not they have a shelf registration, because for what it's worth, ELWS will check that one. Most of the small caps will. Initial registration, that's an F1. Let's see. So these are all F1. So now let me check ELS chart, ELWS. Right, so it's a somewhat recent IPO. What about VCNX? Let's check this chart. Not a recent IPO. Series of reverse splits. All right, let's see if they have a shelf. VCNX. So they've got a shelf registration here, which is not, again, is like not surprising at all. This is very common, but in this market where it's harder to borrow money, these companies are more likely to tap those shelf registrations and sell shares. So it's just something to be on the lookout for. I am cautious on holding these stocks for long periods of time, sort of waiting for them to make a move. You just have exposure risk. So I continue to focus on precise entries, quick exits, locking up base hits. And when we have something that's moving quickly, I'll trade it, very actively during that move. But I want to aggressively trade the front side and not overtrade the back side. I do have some great episodes about that on YouTube. You'll find a episode on, let's see, MACD here. This is a good one for learning how to avoid false breakouts and trade the front side of the move. The supply and demand one is good as well. And then let's see. There's another one that I'm looking for here. Where is it? This was a pretty crazy one, that drop. Where's the one I'm looking for? I'm not seeing it right here. But this is it. Number one indicator for avoiding false breakouts. I would check that out as well. That's a good one. So anyways, yeah, it's just something to be aware of. So trade the front side, avoid the back side. That's kind of my my feeling right now on these. And some mornings I'm going to sit down, I'm going to look at scans, I'm going to think, well, unfortunately, penny stocks are the focus right now, or stocks are the focus that have already made their big move early pre-market, or maybe after hours. I missed it. And I really don't want to get caught up churning commissions trading the backside. I want to focus on things that are moving cleanly, that are moving right now, and to have a pretty fresh catalyst, preferably. I think that's where I'm going to find my success. So what I'd like to do for June is see if I can repeat the success that I had in April. Even though in April, in total, I made $4,000 less than I made in May. The red days were tiny. And that meant it was a less stressful month because I was dialed in, I was focused. We didn't have a lot of big winners, but I just kept those losers so tight, and that felt good. So I'd like to do that for June. In fact, I'd like to do that for the whole summer. If I could get through the summer without a really big drawdown, that would be nice. I want to enjoy summer, and unfortunately, when I go into deep drawdowns like I did in May and in March, I really, I get very frustrated with myself. And so sometimes it's better for me to kind of, take things down a notch, reduce the size, and reduce the stakes, just so I can kind of relax a little bit. It's especially true when I'm trading and traveling. It's not worth it to make a huge mistake. One of our students at Warrior Trading is getting married this week, and we were all like, don't trade on your honeymoon, for the love of God, because that is a recipe for disaster. Trading on your honeymoon, and then the stakes are high, you really want to have a good day, then you have a terrible red day, you can't help but feel frustrated for the entire rest of the day, or maybe even the entire trip. So yeah, definitely take the words of wisdom from traders who have made these mistakes before you. And if you've got some summer vacation planned, be really cautious about the idea of trading on that vacation. If you can afford to not trade on it, then I would encourage that. But if you're going to trade on it, bring the stakes down, because you're not going to trade as well as when you're at home. You never really do. It's so easy for us to overestimate, our ability to adapt, but it's actually very hard. So let's see. Yeah. So I like I said, game plan for tomorrow, beginning of the new month. We're all starting basically in the same place. Those of you guys that want to do a 2-week trial at Warrior Trading, I'll put a link in the comments. I think you'll see it probably in the comments of the video from Friday as well. This one right here, maybe one of the other ones. But in any case, I'll put the link there for you guys to do. It's a 2-week trial for $20, so you can trade over my shoulder, watch with me for 2 weeks, and get a sense of what it's like to be a Warrior Pro member in our community. I'm going to start beginning of the new month, just breaking the ice, trying to get green. I did have a little bit of a streak a couple weeks ago where I kept starting the day in the red. I was able to break out of that this week, but I want to continue to really be thoughtful about those first couple trades and ask myself, is there a setup right now? Because in a really hot market, just something moving is enough for me to jump on. I can get very aggressive, but in a colder market, I've got to be a little more cautious that I'm really sort of, dotting my I's and crossing my T's and making sure that I've gone through my checklist to make sure something looks good. So I'm going to be a little bit more picky at the beginning of the month and on my first trades each day, at least until I've built a cushion, and then I'll start to loosen up those filters. So thank you guys as always for tuning in. I hope you hit the thumbs up. I hope you're subscribed to the channel. For those of you guys that tune in on YouTube pretty much every day but aren't already subscribed, hit that subscribe button. And I'll see you for my next episode bright and early tomorrow. I'll have another upload for you guys. So thanks for tuning in. Reminder as always, trading is risky. My results aren't typical, so manage your risk, take it slow, and I'll see you back here tomorrow morning.